There's three major changes. The biggest one is a change that we haven't seen to the limit on insured mortgages since 2012. And we've gone all the way from $1 million to $1.5 million. Now, Sonia, this was on the table pre-COVID. And pre-COVID, we were looking at maybe like a 1.2, 1.25 cap. But we've moved it all the way to $1.5 million. And that's for insured mortgages for purchases. Now, the other aspect of that benefits first-time home buyers is you can now extend that up to 30 years for an amortization. And insured mortgages aren't only for people who are making their first purchase, but it can also help those who are moving up the property ladder. So the average first-time home buyer might be buying for $650,000 or $700,000, but this helps people right-size now accordingly. And if you ask a lot of Canadians what the largest obstacle is when it comes to buying a home, Sonia, it's down payment, because not everyone has Bank of Mom and Dad.
Yeah, and so tell us about the changes that are coming to down payments.
So you can purchase a home up to $1.5 million with an insured mortgage, tiered at 5% plus, according to the amount. So if you're purchasing a home for $1.2 million, as an example, previous to these changes, so previous to December on the implementation, you'd require a $240,000 down payment, which even people with two incomes would find it difficult to save that amount of money in a period of time. Well, now that down payment can be as low as $95,000. So it's $145,000 savings in down payment. Now, combining that with the 30-year amortization, that's also $600 in a lower payment. So it certainly helps from a cash flow management perspective. However, we simply can't ignore that we're getting more debt for a longer period of time.
Exactly. And so I think in the overall picture, do you think this is a good thing for Canadians? Do you think that this makes housing more affordable?
It doesn't make it more affordable. It provides an opportunity for those who have the income and want to save the appropriate down payment. Now, here's how this helps mortgage holders. There are millions of Canadians with mortgage renewals coming up that had mortgage rates in the 1 or 2%. And right now, rates are in the 4s. So a lot of mortgage renewals are very stressed with the stress test. Now, because they're moving this amount up to $1.5 million, all of those who had insured mortgages now fit within that category and don't have to have the stress test of 2% above the rate that they obtain in order to switch lenders. So it also helps assist with competition because insured mortgages in Canada get the lowest mortgage rates.
Interesting. And so do you think that this is going to, heat up the housing market once again? Because we've known that things have been kind of stagnant, at least this year. I know a lot of people are still waiting for interest rates to possibly go down further before they jump into the market.
It's going to help those that were saving, that were on a plan to save for a down payment that now don't have to come up with as much. Also, there's been some other tools that have been released. We've had an increase to the RSP limit that you can take out, which is $60,000 per Canadian. We've had the introduction of the first-time home savers account, which 750,000 Canadians have registered for. That's only been available since 2023, and it actually has a sunset clause in 2028. So if you want to buy a home and you haven't opened one yet, you've already lost $8,000 in room, so you want to make sure you open it today, even if you don't contribute to move forward that room. So tools are in place to help. Does this increase supply? No. Does it make it easier to qualify? No. But from a cash flow perspective and getting the down payment option, it's something moving forward.
All right. Well, Angela, thank you so much for clarifying things for us.